What's happening, speculators? Welcome to the Power Hour. I'm going to trade the last hour together of a pretty non-eventful day. Not a whole lot happened. So just sort of ho-hum. April Fools all month, huh? So welcome to Mr. Trump's wild ride. I was saying today in my trade room that that when I was a kid, I'd go to Disneyland and they'd have these books like little ticket books, like little coupon books that you get. And they'd have a bunch of A through E tickets, and you only got a couple E tickets. The E ticket rides were the fun ones, like Space Mountain and the Matterhorn and stuff like that. Then you'd have like B and C. I think Mr. Toad's Wild Ride was actually a C ticket. So welcome to the broadcast. Can I get a 1 in the chat, please, for picture and sound? Make sure that it's okay. The volume is good. I'm trying to speak right in this thing without sounding like Darth Vader. So I'll just wait and make sure. I think it should be all working. Good. There we go. Yeah, yesterday I couldn't quite get everything working in time. I was going to try to stream from my laptop. I got a new laptop that I'm setting up. So we're ready today. Yesterday was kind of more of the same, except it was to the downside, right? What a day yesterday. I was saying also in the trade room yesterday that wouldn't it be wild if they gave up this entire move and closed lower. Now we couldn't quite get to the Monday open lows. I'll take some trades if we get up to, let me just move this up to here. We'll just have a single short we'll put on at the plus ones. This whole shaded area here is our offer zone, which if we measure this, 1,180 points, 1,000 point offer zone. So I don't know if I've ever seen that. I started actively trading OEX options and getting involved in pretty active trading in the spring of 1993. And then I'm sure you've heard everyone list off, the 1997 Asian currency crisis, the 2001-02 kind of dot-com bubble, the financial crisis, some debt downgrades that move things around, even when we had to be concerned about what Boehner was going to say about Greek sovereign debt. Of course, the pandemic. I was in high school during the crash of 1997. But I will tell you, since last Wednesday, a week ago today, that this is the wackiest trading action I have ever seen on a sustained basis that I've ever seen. I was at the gym when this announcement came out, and I thought, hopefully they checked this time, because we had the same rumor of this pause last time, but I guess this time it's real. For today, I've been trading a little bit of gold, a little bit of treasuries, and mostly Dow, just because of the Prop Done Right. Get your copy of Prop Done Right. Look at the description down below and realize that I think I'm going to talk about the topic today of how to approach really volatile markets. Now, this is on the extremes, right? But size solves everything, everybody. So since size solves everything, it lowers your blood pressure, allows you to stay in a more clear state of mind when your sizing is smaller. You should shoot for just much smaller than you're even capable of trading in terms of your account size and maybe even your skill level. So when things get crazy like this, size down. And one of the easiest ways to size down is to go to the Dow Jones. I know it bores people, but it's 50 cents a tick, right? So it's about 1/2 of the volatility profile from a price perspective of the NASDAQ. So every time you get involved in a single NASDAQ, you're taking on essentially 2 times the risk that you would, almost 2.5 times the risk that you would be taking on in the Dow Jones. Now, how do I measure that? I measure that based on the ATR, the 7-day ATR, relative to the tick increment, right? Technically, there's 4 ticks in each NASDAQ. I don't know if many people know that, but there's 4 ticks in a NASDAQ, and they're each 50 cents as well. That equals 1 point, which is $2. $2. Okay, so you size down. I see something about increasing risk. No. You absolutely do not increase risk. Your daily risk budget should be 10% of your account value if you're an active day trader. The only way you can ever increase that daily risk budget is not by increasing or growing the size of your account. Everybody teaches this incorrectly. Have you ever seen the spreadsheets? One contract, then you grow it to this, now you can do 2 contracts, and you grow it to this, now you can do 4 contracts. With this silly linear, as if 2 and 4 contracts feel the same, and then they never say, do you add 2 and 2, or do you do this or do that? So no. The only time you increase size is when you can increase your daily risk budget. Risk-adjusted returns are the only way to truly measure performance in trading. So in order to increase your daily risk budget, you don't do that based on volatility. You do that based on your skill level. Have you demonstrated that you can exceed your daily risk budget multiple times during a trading month? How many? I shoot for 3 to 5. If your daily risk budget is $200, you better have at least 3 or 4 days that are greater than $200. Because I've said a million times, you cannot eat like a bird and shit like an elephant. And that's what most traders do. Even if they're not doing that in the classic way, which is a lot of small wins or decent wins and then a huge loss, even if they're doing it more in $200 daily risk budget, make 100, make 150, make 90, lose 200, make 80, make 100, lose 200. That will keep you in the game, and that is fine while you're learning and building your skill set. But ultimately, you're going to have to get off that hamster wheel as well. So decreasing size, choosing the right instrument to trade when things get really crazy. And again, prop done right, download it down below. I'm supposed to put in little calls to action so they can edit them. Like, subscribe, leave a comment. Download prop done right. Chapter 6, start with the Dow. Right now, Dow's up 2,500 points, and we are looking to short this red line up here, which would be 40,474. And then there's another one at basically highs of the day. Because what we have going on also over here is we have an extreme turn sell, which is generally a pretty reliable signal. Not perfect, doesn't pick the top or the bottom all the time, but this is what we'd call a single bar extreme turn sell. So when you see, is that on the screen? Yeah, it's on the screen. Let me know if my head or anything's ever in the way of something I'm showing. Here we go. This is an extreme turn sell on this bar right here. Pretty much did pick a short-term top. We're getting back up close to that.
Order filled.
And there's our short right there. What we've seen is these immediate rejections, and it just comes right back. So Now, if we go up to 700, that's going to be another $100, right? Or so. Hopefully you don't get too freaked out over a $100 red number, and we could just sort of manage it accordingly. Now, under normal circumstances, your target would be, depending on how you're doing this, way down here. Now, these are not normal circumstances, so I'm just going to get in real scalper mode just to show
Order submitted.
some, and see if we can get a move down to here,
filled.
and we'll just trade it again because we're.
Order submitted.
You can do little measured moves here, folks. So the way you do a measured move, and none of this is very important. These are very unusual times, right, to be scalping like that. But you see how that's kind of the measured move you get there. The automated strat would need a break below this yellow line here. I'm not running the automated strat right now, but the automated strat would need a break below that yellow line, and then it would put an order on this yellow line. Let me trade this in a prop account so you can kind of see it.
Order
so
submitted.
now it'd be resting an order there and there.
Order submitted. For
the pop back up to that yellow line. That's a 233 EMA just on a tick chart, so that's what that looks like.
Order filled.
Okay, so now it's short there. And add would be here. And then the automated strat would be drawing in some 13 period swing lines that meet certain criteria, so I don't exactly know where it would be putting targets. But we'll just trade it manually.
Order canceled.
All right, going to get the same trade in over here.
Order filled.
All right, now we got a 2-lot on. Let me just get the copier going while we're doing this for these two accounts here. There we go. Boom, boom, boom. We'll use this one as the lead. And just scalp that.
Order filled.
Redo it here.
Order submitted.
This methodology of selling plus twos, we call this the plus twos on days like this, and even days where you're sort of extended to the upside. Now we know that this is a super unusual day, so we're not looking to optimize for these types of days. But what I'm looking for is, can I stay in the game and manage risk long enough to have at least a contract or two on for a fall? Now, the issue is you often have to take some heat while it bangs around up here. The S&P is not yet at its plus twos. That's going to be 54, 58. So it has a ways to go. I'll just rest orders up here at plus twos there as well. Same theory, just using these Tradier account, not Tradier. What are they called? Tradeify. Tradeify. Now the status for the day is, let me move this over here a little bit so I can always see it. There we go. The problem is that's over the screen, so I don't want to do that, but we'll go back when we either close this out or Someone who wants the story of the javelina. No, the javelina was a story for members only or people on trial. But I was in Arizona in a place called Canyon Ranch for the last 4 or 5 days. It's freaking beautiful. I highly, highly recommend it. As long as you can manage to not get charged by a wild pig. End of story. I see a little concept of consistency. It's my least favorite term. It's another. I'm going to be that guy that tells you that almost all of it's nonsense.
Order filled.
The only thing you have to consistently do is not lose, and not lose a lot. Everything is based on your ability to manage risk. Profits will take care of themselves. I am not consistently profitable. I make a little, I lose some, I lose some, I lose some. Sunday, I lost a lot. Sunday night. I ran a risk of ruin on the events of Sunday night, and it was a 31 basis point thing, which basically means there was 1/3 of 1% of a chance that what occurred, which is a 4.5 standard deviation move, basically on the open. So I'm not going to try to optimize for those things. I always run risk of ruin, and I'm fine with a portfolio if the risk of ruin is like 3 to 5%. So, yes, I get it. We have to say things like, but what you need to consistently do is show that you have the discipline to never lose big. As a day trader, as a flat at the end of the day trader. Because the other story that I told in the trade room is how I torched $11,700 on 6 micros. Now, when I say I torched it, there was a small issue at that broker too that increased their margins and then had a platform that didn't open. So that's always great. That being said, I'm not going to concern myself too much about events that happen every decade or so. On a day trading basis, I control my risk. I can hit the close button. I can do whatever. So now I'm going to run a little buy stop right here.
Order submitted.
Oops, just missed it. So it ran right through it. So let's just
Order submitted.
add back. Add back, baby. We put this over the screen for a moment. All these results are trading the same thing that you're seeing right now. I don't get off screen and trade minis and throw on a whole bunch of size. It's 2 to 3 micros across a few markets. Right now, we'll just do the Dow for a little bit. Check in with the S&P. I had issues with this before, but I think with a few accounts, it should be fine. I'm just going to attach this order to this line so I don't have to manage it. Can't tell you the last time I saw the Russell up 154 points. It is today. Now look, if this ain't your cup of tea, and it's not going to be a lot of people's cup of tea, you just watch. You don't have to be any trades here. You don't have to be trying to pick a top on a crazy ass day like this, right?
Order filled.
But please do not. I would suggest that you do not optimize for trying to find pullbacks to get long after this move's already happened. you might want to lay off that for a hot minute, you know. If you want to check in on the wild NASDAQ, there's the NASDAQ. Look at how much that blew outside the bands. Up 1,910 points on the NASI. S&P came up and did not quite hit the plus twos, which is going to be 54.67. I have the automation turned on there, so we should be okay.
Order submitted. Order filled.
Now, some people could choose to do what's called a graceful exit on this particular trade. Now, let's say your risk budget was $250, right? And you're in a single trade, and it's remember when I was able to. I'm going to change this to, I don't know, somewhere in here to here. I can change this to dollars, right? Currency, right? Okay, so that's $55 per contract. $55 per contract. I have 2 contracts on. So you can see the blotter there showing, you know, down 60, at one point down $130 or something like that, right? Where's your stops? Probably put in a soft or hard rule that you don't let any trade take more than 50% of your daily risk budget. Just reduce size or close the trade out. And you can do that regardless of what the market conditions are. So someone had said, increasing risk when things get crazy like this. No, stick to exactly the same way it is. Just reduce your size so that a 100-point move is really $50 instead of $150, or excuse me, $110 or something like that. NASI has not found a, so let's talk about how you could trade this NASDAQ here. Up here, there's no touch. You can't do anything. If you were short from anywhere inside the bands and it ripped like that, you better just manage risk and you're out, right? There's no longs. There's no longs. This moving average is not a long either. So what you do is just sit and wait for it to come back inside balance. So you want it to come back inside these lines. What's good, what I think, you know, I'm talking my own book because this is a strategy that's pretty simple that I teach, is it also just, it's very easy to understand when there's nothing to do. There's just nothing to do here, right? On the S&P, we're still inside the bands. We're going to have a shot at 54.71s here. We're going to have a shot at the 54.71s.
Order filled. Order filled.
Okay, so there's a touch of the 40,700s. Maybe we can go up 10% today. 10% in the Dow?
Order filled.
All right, so now I'm short here as well on the S&P. So this affects my decision for how long I want to be in this trade, if at all. It almost might just be literally a quick just
Order filled.
Get out. And the reason I'm doing that is because I'm already short a correlated instrument. That's a risk thing. That has nothing to do with rules at any of these firms. You can be short correlated instrument. You can be in the same direction on a correlated instrument. Now I did short it here live over here. So here I'm going to just put a buy stop in
submitted.
And then try to resell these swing
Order
highs.
Submitted.
So what you're seeing now is a different position than the other one. That's the beauty of having all these connected demo accounts and things, is you can put out little scouts and see how things are developing and then get in there with a real trade. Anyone want to guess why I don't use my camera in the PTR? Pretty sure I did an email and a blog post about why. So this is a little made up stuff here, which is what I want to be is new highs plus quite a bit today. Usually it's new highs plus 3 to 5% ATR on the Dow, but what is 5% ATR on the Dow now? 10% would be like 70 points. So I don't know if I need to do 70 points, but it should be. It should be about 70 points. So we'll go up to there, like 40,000. What was the high? The high was 729. I don't need to be that many. Go 801. 801's a good number. 801 drum beat. Yeah. I get up at 4:15 in the morning, and while this skin is immaculate and this hair is spectacular for double nickel, I'm not quite ready to be on camera in the dark. I have good lighting in the office when I turn on the lights, but yeah, use the natural light. I have two beautiful windows on either side of my office here. So all right, I'm going to take these off here.
Order filled.
Had some small profit on some shorts in the S&P. So we're down about $115 on this trade. I think we can afford to give back a teeny bit, given that they're up $2 or $3 grand today. 2,500. I might need to do that. Look into these AI avatars where I could just. We've talked about the guy that's he's a panda, right? Isn't there a guy that just talks with a panda avatar? Show me how to do that. Isn't that a Snapchat filter? So let me get back to graceful exit, because I stopped that train of thought there. So the graceful exit, I've done an entire video on this trading technique. It's a trade management technique. It's not a strategy. And it's called the graceful exit. And I did a video on it. You can check on my YouTube channel. Just sort of search Graceful Exit over there on the Futures Fanatic channel, and there's a 15-minute video of it. I'll give you a quick summary of it here. So the first thing is you have to determine, when is it engaged? When am I looking to gracefully exit? And it's usually 2 or 3 criteria. It's when a trade kind of immediately and then significantly goes against you. So immediately we can kind of measure. The markets are moving so fast right now that these things are just going... They're going a little nutty right now, right? So, did something go immediately against me? Because I don't know what it is. It's just Well, I do know what it is. With these types of trading strategies, Mark's price generally will react at a level. Again, this is a broadcast I'm doing today where I really don't want to try to optimize for something that occurs almost never. I've literally never seen days like this ever in the history of my trading. So let's not optimize for that. But let's say that this certainly would serve as a trade that you might want to look to gracefully exit. So once you've established whether it's significant and whether it was quickly, then you go, okay, I'm going to go into graceful exit mode. Now, ideally, people like to scratch. They're not going to make money. They just want to get out. But don't try to scratch it. Just take any pullback that occurs. And there's been a number of them. So we're going from maximum adverse excursion, which is every tick against me when I'm short and the market's going higher, to what is my maximum favorable exertion, when it's coming back in my favor. Now, this is all adverse right now, but what I could do is just do the same thing where I'm just going to measure just this simple thing and say, okay, if this swing holds, the next move I get, I'm getting out. Now, remember, this is just a management technique. Nothing overrides the fact that if you have a certain risk budget, and your risk budget is, again, $250 or $300, don't let any individual trade take half of your risk budget. Just hit the close button immediately if it starts to go against you. Now, today just happens to be that there's essentially no trade in 2 contracts in the Dow, even 3 or 4, that's going to significantly impact my profit today. There's nothing that can happen. In other words, I just can't get hurt. So it's actually a day to leave this on, and just so what I'm going to do is gracefully exit here. Just boom.
Order filled.
Okay, so I take that off. Let me just make sure that it was in both accounts. Okay, good. And now I really have earned the right to come back in.
Order submitted.
Okay. I'm not taking on any additional risk by letting it go back up to where it was before. Plus, the nice thing about at least the first in, first out, or the way I have my Ninja set up, is as soon as you do that, it reduces that big red number because it takes the open and puts it in closed. So half of this goes into a realized P&L, which is green, so I don't even feel it. Doesn't even hurt. Doesn't even leave a mark. All right, checking in with the S&P. Remember, I did get a fill up there. So now I go into rooting mode. And this sounds weird to a lot of, but if you trade appropriate size and you trade small and you manage unprofitable positions, you can actually root for a trade to go against you within reason so that you can pick up more inventory for the eventual move. The other thing that you do with graceful exit, and you can gracefully exit all of your position or what I did, which was half, right? So I did half. I kind of like half because it leaves your options open. When I was an FA at Merrill Lynch for 4 or 5 years, you can never get anything right. Like, no one wants any financial advice. They don't want to listen to anything. You give them a stock on the syndicate for no commission. It doubles in price. The analyst says it might be time to take some profit. You call all of your clients and say, hey, remember that stock that I gave you for 0 commission? It's up 100%. How about we sell half of it? Sell half so you can't be wrong. I mean, right? You sell half. If it goes higher, you still have some. If it goes lower, you sold half. Well, guess what? All clients feel that's still not great. They want to go, well, should we sell it all? Should we sell some? All this silliness, right? I had a true story about that where we brought Oakley, the sunglass company, we brought them public. And I was on the syndicate desk at the time. I was a young broker, but I got a pretty big allocation and just literally gifted money to about 30 clients. About 7 months later, I think the stock had doubled, maybe even tripled. No, it was, so Oakley was, okay, it was Massimo's, this company called Massimo, which was just their IP was, sand shorts for playing volleyball. I think that brand still exists. It's at Target. You can get a pair of shorts for $8. So anyway, hey, give me one in the chat if you are short this Dow or you have a similar position on. You're just kind of doing this here. I mean, again, I don't think we can get too hurt on a couple micros here late in the day. Anyway, back to Massimo. I think the stock IPO'd at like 10 or 15 bucks, and like 6 or 8 months later, it's like 30. And again, this is not a tech company or a software company or something that scales, a clothing company, right? So I call these 30 people. I'm like, hey, listen, I think we should sell half of this thing that, again, you paid zero commission on. And yes, you'll pay back then, everyone thought that the moment you called them, it was because you wanted to milk them from some commissions, right? We used to have these shirts that we couldn't wear to the office, but when we do off-office thing, they'd say, OGC, only gross counts, right? How much production you doing, kid? So this is probably not exactly how it went down, but for the sake of this argument or this story, I'm gonna do it like this. Let's just say that half the people chose to sell half of it, half the people chose to sell none of it, and half the people chose to sell all of it. Okay? Well, here's what happened over the course of the next 6 months or a year or something. I think the stock doubled again, right? So what's interesting is you hear from both the people that sold and still have some. They're greedy because they didn't have all of it. You hear from the people that didn't sell, and they're like, well, listen, I'm not taking your advice or Merrill analyst's advice because now the stock's doubled again. Now, granted, they still haven't sold it. And then the people that sell all of it complain as well because they missed out on all the gains since then. Then you flash forward another 6 months and the stock is at $3. Do you hear from anybody? No. And that in a microcosm at a very young age of 25, I was like, F this business. I'm not dealing with this. So anyhow, there's that story. Looks like, is anyone in this position? Didn't sound like anyone's. Most of you have probably just locked up some serious gains. But now that, remember I was saying we need to wait for the NASDAQ to get back inside the bands. It did not quite get back inside the bands. The Dow has, so it actually makes this a trade you can take
Order
again.
submitted.
I mean, the fact that we're getting outside the bands on a day like this is just astounding. It's as astounding as having a 4.5 standard deviation open on Sunday night. That Friday, I almost get killed by a javelina. Had a great relaxing weekend. I'm at the pool.
Filled.
It's like 2:45. I'm like, shit, I got to go back and watch this nonsense. And I had a little bit of a sense that it would be kind of a down gap because I was watching, you could watch Bitcoin and then they give you an indication like 10 or 15 minutes before of sort of where the futures are, but that indication was way off. I think it showed the Dow down like 500 or something, and I think it opened up down 17 or 1800 points. All right, anyway, now I'm short again. I have to use the right terms here. Good old Massimo. China lifts tariffs on U.S. goods to 84%. Headlines, I love the headlines. All right, let me get a little soundbite again for the editors. Make sure you download your copy of Prop Down Right. Check the description down below, free ebook. It has a 10 video course lesson. You get one email every day. Yes, you can use it on a 1 minute chart or on a time chart. It just, to me, it just doesn't look the same. So here it is on TradingView, if you will. So see this? So that's the Dow on a 5 minute on TradingView. Order rejected, gate timeout to learn. Oh my God. So here it is on TradingView. You see how it's just like you could take it down to a 3 minute or 1 minute, and we're just we have discussions all the time in our group about people that don't like the Renkos. They just move too fast. You don't have to use them. The key is this. The key is this line here. But let me switch to a 1 minute. Let me just not a 1 second. I'll switch to a 1 minute. It gets a little better. See, on a 1 minute, it gives you a little bit more of some clarity to see there. I want to see a 30-second chart. I don't know. That's not terrible. So now you're starting to see where the lines clean out a little bit. But I don't know. I would prefer these Brickwicks. Plus, I have just used them for so long that for this kind of active trading, when I'm discretionarily point and click trading, which I don't do all that often, except for in the trade room and every day for the rest of my life if you join the group. From 8:30 Central till 10 Central, every single trading session. They're all recorded. Like I always joke, it takes a long time to doctor these screens that I can show you every day. It takes a long time. You gotta, especially when they're moving like this. I mean, you can mess around with it on whatever you want. What the goal is to try to get a slope to the bands that's manageable, that gives you something you can work with. When I switched to the 1 minute here, kind of gave me a slope to the bands that I can work with. Sean, that's just inside baseball. I don't know if anyone's going to know. What you need to do, everybody, all you members who are in here, is get with Brad, get an affiliate link for the Prop Done Right, and then tell them they should download Prop Done Right and then drop your link in the chat, and I'll let it stay there. That way you can cookie somebody to you if they ever choose to join our motley crew. You can get paid. How awesome is that? Let's check back in really quickly with, hold on a second here. I'm going to move this over here. I'm going to check back in with the S&P. I'm going to put an order back at the +2s.
Order submitted.
In case we get a little ripper here in the next 5 minutes. By the way, the NASDAQ is trying to work its way back inside the bands. As soon as we get back inside the bands, then it makes the +2 actually a signal again. When this is happening, you cannot do anything. The easiest answer to all of this, well, what do I do if it gets outside the bands and keeps going? Well, if you're not in a trade, you don't do anything. If you're in a trade, your daily risk budget trumps everything. So make all those decisions based on that. I mean, this right now is a scalper's dream because it doesn't. These are 50-point moves. These moves here are 50-point moves. So they're $25 you're just picking off the floor. Now, are you picking up pennies in front of a steamroller or picking up dimes, whatever that? You really aren't. If you can manage your risk on, if it rips higher, just hit the close button. You can be chopping all around here, adding size. I mean, it's holding for now. Just a matter of not if, just when it moves in one direction or the other. Yes, it can be. Use that. You know, pretty soon these streams are going to have to be on topic. I'm going to have to talk about the same thing for an hour. I don't know if I'm going to be able to do it. So that they can they can get one usable piece of content out of me blabbering for an hour. This is the funniest thing. My mom is 81 years old. She'll be 81 pretty soon. And I taught her how to do a call spread. And this is funny. She's like, this can't be right. It's so funny. This can't be right. She made, we put on an SPX call spread. It's up $7,000. I'm like, yeah, well, things like this don't normally happen. This is a little wacky. All right, there we go. Now it didn't hold. Hold! Huddle. All right, we got our made up level of 40,801. Wait till the MOC come up. Well, on Sunday night, I got her involved. We had moved all her equity to cash, kind of like in mid-February. And I said, this time, when things get a little crazy, we're going to do fun things. We're like going to buy calls. We're going to buy a little of that funny Dow SPX, Schwab S&P fund back. She is great because she's a good client. Bought Bitcoin at 17,008, sold it at 100. 100 even. That was a pretty good trade. All right, what are we gonna do here in the next minute? It's gonna rip and give us a fill at 800s. A responsible boy would cancel this 5501, but I'm not responsible. I'm gonna leave it on there. Leave it on there. I'm glad I'm recording today because I get to, for posterity, I get to show a day when the S&P is up 9%.
Order filled.
Well, there we go. Boom.
Order filled.
All right, we got a fill here too. Now this one's interesting because now we correlated, so I kind of have like a 4 lot on. We'll give it a little bit of time, but I'm gonna probably just have to close this real quick.
Order filled.
We got to close that because I got all my exposure here on the Dow, and the Dow just ripped. What was that? Another 200 points.
Order filled.
Now we're at 900. All right, definitely eating into our. Did you guys ever hear? You know who Phil Locke is? He has this. He has this term called upstuck. It's like when you're playing poker and you'd want a decent amount of money, but you give a lot of it back, but you're still up. That's going to be the results of these two accounts here. We're going to be upstuck. Well, we're also witnessing some of the greatest market manipulation in the history of ever. What did the NASDAQ do? Woo! 2,105 points. And still going. Still going. So let me focus. I have the Dow loser on. It's important to focus just real quickly on this right here. So everything's correlated right now, going higher. You get a signal here. You can of course hold this if it's your only position on. I mean, these are now all in graceful exit mode, but you got to close that instantly if you already have something like this on, right? Okay, so the measured moves to the downside are very minimal. I need to see this get back below the line here. That's enough to run a buy stop.
Order submitted.
And then sell the high again.
Order submitted.
Okay, so it should not break that. Maybe it will. This is just nuttiness, right? Normally you'll get a bounce off that line there, but there we go. We got a bounce.
Order filled.
So bounce for a moment. See what happens in here. Fun game of taking the losses and putting them in the realized bucket.
Order submitted. Order filled. Order filled. Order submitted.
All right, another opportunity to gracefully exit.
Order filled.
We'll take that off, and then we're all flat. So now I'm just going to
order submitted.
See if I can get a pop again, because I'm still in it live here. So I'm in it live at much better prices. I sold one here, another one there. So we'll see if this can pop up. So I don't know what my equity high was in these accounts, but it's not too bad. Not too bad. Remember, according to the letter of the law of this strategy, this is not a signal. Okay? This is me just F-arounding and finding out. The signal is here to short when we get back inside band. Okay? This is your only valid signal here. And then some of you could start to look at these strats. Well, again, I could explain the logic, but once you break below this, this ends up becoming a short as well, if you want to short up here. All right, so I'm going to run a buy stop here now.
Order submitted.
It's enough of a profit on this one. And remember, I took off the loser that was the I basically scratched it, lost a few $100. As I think I had said earlier, the whole purpose is, can you kind of stay in the game long enough to find the move, right? So now this becomes a sell right here on this line.
Submitted.
And then I'll sell basically the swing highs there as well. Technically that got hit, but maybe. So if you're going to scale in, this could be a short right here. All right, just 3 more minutes. Yes. This is more spectacular manipulation as opposed to normal. The key is there's 2 types of information. There's inside information and no information. So, gosh, the phone calls that must have happened before this announcement, right? The phone calls that must have happened.
Order submitted.
It's got to break back inside the bands.
Order filled.
And it didn't, so we'll just
Order
scalp
submitted.
it off of here. Now, there are people that on really wacky days, you can use this standard deviation as a pullback to go long. I mean, wouldn't really be my cup of tea, but you could do it. As long as you don't get shaken out on these little things. It's better to buy pullbacks to the plus ones, which is over here. But that's so far down. Again, today is unlike any other. Unlike any other. All right. I wouldn't be surprised if they rip it right back up 100 points, right up to that 41,000. And then rip all the weak hands that got to be out before sort of 115 or 108, somewhere in there. Or we go back down. Who knows?
Connection lost. Order submitted. Order filled.
All right. That's fun. That'll be the end. Now we're going to get all this silliness here. Look in the NASDAQ. The close there. Then they rip it again. Grip it and rip it. What did we lose connection to? Oh. We've got to reconnect again. We lost connection to these Trade-Evade accounts, or these Trade-Fi. So let's try to reconnect again. Because it says I'm in a position. Yep. Now we'll try to reconnect. All right, now we're back. Okay, short a 2 lot there. So let's just try to close these out. I don't know why it says we're in there twice. Can I close these?
Order filled. Order filled. Order filled.
What is going on? Long, short.
Order filled.
Interesting. So when you have this happen, sometimes you have to go into Tradeovate. I don't really have any idea what's happening here, but these accounts show flat here, but it still shows there's a position on over here. Let me go here and just flatten everything.
Order canceled.
And we'll flatten all. Yeah, but these are now, they're kind of stuck. So I'll go in there and close those out. Adam, it doesn't really matter. It's just an accounting thing. I mean, it doesn't matter. You can make that change, I think, over here in properties. The question is around how to have Ninja or any other platform manage the open and close P&L relative to when you put the positions on. I don't think it's a big deal. All right, now's the time where I can't answer any other questions. I don't think we didn't have any. So that was a graceful exit. Yeah, that'll be it. All right, everybody, stay green, trade like you mean it. If you're not already, you can check the description below and join us in our trade room every morning, 2 weeks for let's check it out. No credit card required, nothing to cancel. Other things you can grab off my website if you are so inclined is you can go and sign up for I want to show this too. So this account is down $2,300. So I'm going to work my way back. Just trading micros. Got stuck up in this hole last week as well. So working our way back on that. It's not all sunshine and roses, but at least it didn't get wiped out. Right here, you can get a free 30 video course. Check that out. Name, email. Check out our trade room. You just hit try TDG. Name, email is all it's required. Put in a valid email or I can't give you the logins to the trade room. All right, everybody, stay green, trade like you mean it. We'll see you later. Be good. Bye-bye.